Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 27th of March, 2023. Alright everyone, let's get into it. So we have an update here around the bug bounty for the Shapella upgrade. So as we all know, the Shapella Shanghai upgrade is going live on April 12th, not very far away now. And the Ethereum Foundation has bumped up its bug bounty kind of reward with a 2x multiplier. So it's up to 500,000 US dollars per bug until April 5th. Now, of course, there are different levels of bugs here. Not every bug is going to be paid out the same, but you can get the maximum, which is $500,000. So the figures here are doubled right now. So you can see the maximum for a critical bug is usually $250,000, but that's doubled up to $500,000. And the severity has to be high impact and high likelihood. So obviously a critical severity there, but there are bounty rewards for lower severity, medium, and high severity. So you can check this out for yourself. Of course, I'll link it in the YouTube description below. And you will also earn points for discovering bugs too that puts you on the leaderboard. So you can see here that this is basically a pretty cool way to show that, you know, you're finding bugs in the core protocol and getting on this leaderboard, collecting points here, and basically doing having a flex. I'm not sure what the points are used for, if it's just for the leaderboard or if it's for something else. But yeah, there's that to it as well. But I'm sure earning up to $500,000 is also pretty juicy for people. So yeah, you can go check that out if that's something that you're interested in. As I said, it goes till April 5th, so about a week from today. All right, so Paul here from the Everlasting team. So Everlasting, they do, I guess, like a bit of services in a bit of everything, staking services, things like that. That he put out a tweet where he basically tagged a bunch of accounts and hashtagged RunDVT, so Run Distributed Validated Technology. Now, this is a bit of a teaser here. There's nothing kind of out about this yet, but I was kind of given permission to tease this a little bit. So right now, I'm running DVT. So I'm running Obal's DVT technology on my solo staking box. And that's all I'm really going to say about it. But I'm running it, and there's going to be more information about that soon. But the whole process was pretty seamless, to be honest, getting set up with it. And integrating it, and as I said, running it on the same box that I run my solo validators on, which is a really fun experience. So I worked with a few others to do this. I worked with the Obal team to do it, and there'll be more information coming out about this shortly, hopefully. But yeah, I truly do believe that DVT, or distributed validator technology, is going to play an absolutely huge part in the Ethereum staking ecosystem. It's going to make staking more secure, robust, and decentralized. It's going to help a lot of these staking services along, and basically some of these staking services can actually integrate DVT and not take custody of user assets at all. So it could help them on the regulatory side, where they basically just run the software and the custody of the asset remains with the users that they're serving. That is kind of the end game to me for Ethereum staking, in that we don't have any providers that take custody of assets. Everything is just done in a non-custodial way. And the providers, really what they do is they just run the software for you, and they can act as a pool, of course, as well, obviously, because the big draw of the staking providers and things like LSDs is the fact that you can pool your assets in there. So even if you've just got one ETH, you can stake that 1 ETH, but I think being able to retain custody of that and being able to control when you can kind of like withdraw and things like that, rather than giving custody over to a centralized service, is the end game. Now, it's going to take a while to get there. Obviously, it relies on the centralized services integrating this technology, and then it's probably not going to trust it for quite a while. But it's here. It is here. It's live on mainnet. Like as I said, I'm not going to say much about here yet, but it's live on mainnet in an alpha a kind of fashion, but it's working, and we know it works, and we know that it works as advertised, so that's very, very cool. But anyway, there'll be more information about this, and I'll be able to give a deeper dive here, but yeah, I just wanted to put that out there for you guys. All right, so there was an MEV event over the weekend, I believe, called MEVconomics, which was organized by ETH Global and Flushbots, and it took place on Friday. So it was 6.5 hours worth of talks from the smartest researchers and builders in the space, covering a wide range of topics in the MEV space. And this account, Tarun's intern here, has put together some of their takeaways in order of, or chronological order of the talks. Now, this is a great little thread to recap exactly, like the most important talks and the most important parts as Tarun's intern has seen them. And as I said, there were 6.5 hours worth of talks that you can go see, I believe they're all on YouTube. I believe Tarun, this account actually linked it at the bottom. Maybe this is a long thread. Yeah, I can't remember now. But the talks I believe are available on ETH Global's channel, so you can go check them out there. But if you don't have time to sit through all the talks, obviously it's a bit of a slog to get the meat of it. Well, then this account has done this thread for you. The thread itself is over 28 tweets, but yeah, it's well worth the read if you're interested in getting a recap on that event that happened on a Friday. And for all, I think from what I've seen and what I've heard, it was a really, really great event. Everyone had a lot of fun. Everyone enjoyed it. There was a lot of great talks done at the event, a lot of great insights given. So yeah, I highly recommend either watching some of the talks or just reading this thread from Tarun's intern. I'll link it in the YouTube description below for you to do so. All right, so I did tease last week on Friday's episode that zkSync was teasing something that they were going to release, and it came out shortly after I put the episode live. Actually, I think just before I put the episode live, I'd already recorded it, obviously. The news came out. So the news, as you all probably well know by now, is that zkSync Error, or zkSync's zkEVM, is now live on mainnet for everyone to use. So you can bridge funds in and use the various apps. Now, there's this thread here on the zkSync account that explains exactly what it is, what stage they're at, you know, that the fact that it's still alpha software. It is definitely not anything that you should be storing massive amounts of funds on or anything like that. But they did go the extra mile in terms of audits. Like I noticed, they spent $3.8 million to secure their zkSync Error, including 7 independent security audits, 3 internal audits, and 2 public security contests. So that's a lot of auditing and security checks there. So that's pretty cool. And then they continued and they said they had an open-ended bug bounty program and they open sourced zkSync Error's code. Now, given how many audits they did, both externally and internally, along with having a bug bounty program, having security contests, you'd be very surprised if there was a critical severity bug found, right? Maybe there's other bugs found in the code, but you'd be very surprised. In saying that, as I said, it's still alpha software. There are still kind of centralization vectors. There's still a bunch of things here as well that you can see on the list here, such as this Security Council, stuff like that. So as I said, don't store massive amounts of funds on here. Bridge over some play money, play around with it, see what it's all about, and you know, and get your head around it and use the apps. But yeah, me personally, I'm definitely not going to be storing a significant amount of money just yet on this zkEVM, zkSync Error. But yeah, it's up to you how much money you want to put on there, how much you want to risk. Not to say that there is like a giant risk and you're gonna get rugged at any moment, but it's always good to play it safe, right? Especially given the long history of unfortunate bugs within crypto. And then they continue on and they explain, you know, what this is, how you can learn more. The bridge is at bridge.zkSync.io, and explore the ecosystem as well. And there was a Twitter Spaces that they did too. But this is very cool. I guess like zkSync can now say they brought the first zkEVM to mainnet, I guess. Not that I think that really counts for much. I think that the users don't really care about that sort of stuff. Honestly, in the long term, it's really going to come down to, really, as I've said before, I think it's going to come down to business development and marketing. And I guess being the first zkEVM on mainnet is, I guess, a marketing point, but it's a short-term kind of thing. But that's not to take away from the fact that this is a huge achievement. This is something that people thought was a very long way away. Obviously, it's not. Obviously, it's here now. It's live, even though it's in alpha fashion, and even though there are, I guess, like guardrails and security concerns around it in terms of, centralization concerns around it, it doesn't really matter, I think. What matters is that it's here, people can use it, and it's EVM compatible, which I guess is what will appeal to a lot of people because they don't have to change the way they use things and learn new concepts and stuff like that. So anyway, you can go check this out for yourself. I'll link this thread in the YouTube description below. All right, so speaking of zkEVMs, Polygon zkEVM launches today. So there is a mainnet beta launch event happening at 10 a.m. Eastern Daylight Time, which is after, I mean, you may be watching the refuel after this event already happened, but I believe the refuel goes live 2 to 3 hours before the event. So just a reminder there for anyone who hasn't watched it yet, and it's hosted by ETH Global. You can go sign up to attend, and I'm sure you'll be able to watch everything. But there's a bunch of speakers, obviously people from Polygon. Vitalik's going to be there. Hudson Jameson, who now works at Polygon actually, and a bunch of other really great people from all the Polygon ZK teams. from Maiden, Zero, and obviously Hermes, which is now just known as the Polygon zkEVM. And here's the schedule down here. So basically there's going to be, obviously, welcome, technical updates, a fireside chat with Vitalik, and talking about security and audits. And yeah, I mean, you can go check out the schedule. I'm not going to read through the whole thing there. But yeah, exciting day for Polygon with launch of their zkEVM. We're going to have two zkEVMs live within a few days of each other. Obviously, there are more coming, like Starkway's building one, you have Scroll, you have Tycho. There are probably others that I'm missing right now because there's just so many these days, which is kind of fun, right? But yeah, I mean, I think that people tend to focus sometimes, from what I've seen, on the fact that they're like, okay, well, zkEVM's alive, now what, right? Is it just going to be the same applications that we're used to? Is it going to be the same experience that we're used to, just with cheaper fees? It's like, yes, and that's kind of the point for one half of it. So I believe like one half of it is the scalability, right? The other half is opening up a new design space for builders. Because as I've said plenty of times before, layer 2 technology will allow us to do a lot more things and be a lot more expressive than layer 1 does. And it goes far beyond just being a scaling solution. But the primary, I guess, use case for the foreseeable future will be as a scaling solution, and the scaling will lead to those other things happening, you know, leading to new novel things being built. But what users are going to feel first is the scaling gains with apps that they're familiar with using, such as all the AMMs that they use on Ethereum layer 1, the money markets that they use, right? The yield apps that they use. Like those sorts of things are going to be redeployed on these zkEVMs, and it's going to feel very similar to Ethereum layer 1 in terms of interacting with them, but it's going to be cheaper and faster, just like you do it on Arbitrum and Optimism today, but you'll be doing it on a zkEVM instead. Now, as I said, I think the long-term winners are definitely going to be determined by business development and marketing, because the business development and marketing is going to be what gets developers to build on these platforms and what gets the innovation going, which then brings the users. So you always have to go to the source, basically the top of funnel, when looking at these things. And the top of funnel is pretty much always marketing and business development, because how else are you going to get people, make people aware of your thing and then get them to build on it and use it? That's how you do it. And that's why the biggest companies in the world invest a lot of money in marketing, right? And still, like, sometimes people will say, well, why does McDonald's and Apple need to do marketing if everyone already knows who they are? Well, everyone already knows who they are because they do marketing, right? It's kind of like if they stop doing marketing, if they stop being front and center in people's minds, well, then people will forget about them and not think of them, right? Maybe not forget about them completely, but it's more of staying top of mind for people. So that's the same thing in any industry, really, obviously, and especially in crypto. Given that we have tokens attached to these things, the attention, you know, as long as you can get attention on your thing, you're winning the game. And that's been a lot of my investment thesis, actually, for a lot of these things. And you can actually look at like the top 20, and you can look at what's in there, and you can think, well, a lot of these things aren't actually fundamentally valuable. It's like, yes, they aren't fundamentally valuable, but they have the attention, right? And attention is the aim of the game in pretty much all industries, and especially in crypto. So as I said, I think long-term business development and marketing will be the deciding factor, but for the foreseeable future, given the users that we have right now, and the developers that we have right now, I think that a lot of these zkEVMs are going to go live. People are going to experiment with them, and it's going to take quite a while, quite a few years, before we see which ones end up being the, I guess, like big winners, right? And which ones end up being maybe the small winners, and which ones end up being useless, or people just don't care about them, right? Unfortunately, that's going to happen to some of these solutions, because not everyone can win. But I'm here for it. I'm here for free market competition, free market innovation, and I'm super excited about it. So anyway, you can check out Polygon zkEVM's event here if you are watching the refuel before the event, because I think it's going to be a good one. All right, so speaking of layer 2s, Dogen here has introduced something called Opclave, which is an OP stack chain that enables, or that turns an iPhone into a hardware wallet with full account abstraction support. This is very, very cool. So you can get a breakdown of exactly what this is and how this works in this Twitter thread that Dogen has put together here. But why this is really cool is because The iPhone already has a something called a secure enclave, and that's where the name OP Enclave comes from, that allows you to basically have a really secure wallet on your iPhone. And the way the secure enclave works, from my understanding, is that it stores basically a private key in there, and nothing can access the private key. Nothing can decrypt it or anything like that. There is literally, I don't even think you could access it if you were able to get root access to the iPhone or able to get into the kernel. I'm not sure if that is true, but it's extremely secure, right? I'm not to get too technical here, but from my reading and from my knowledge, it is extremely secure. So we can leverage that within crypto to make really cool account abstraction wallets, and that's exactly what Opclave has done here, and they've done a lot of work on this actually. So you can see a pretty detailed description of what's happening here. Screenshot at the top. Obviously, it's not the most beautiful thing in the world, but it was done at a hackathon, so you never expect a hackathon project to look nice, right? As long as it's functional, that's what it should be doing. And this is something that that you can look at the source code for. I don't think you can play around with it yet, but you can look at the source code for it. You can read this thread, obviously, on Twitter about it. But this is the kind of stuff that I love seeing come out of these hackathons. Obviously, the ones hosted by ETH Global are the biggest, but these projects, not all of them, and not even most of them, but some of them go on to become the next big, billion-dollar 0 to 1 idea that happens, that gets built out within the Ethereum ecosystem. And if you're an investor or if you're someone who wants to keep up to date and be really early to things, this is probably ground zero, right? This is basically where you need to be. This is the start of the journey, is looking at these hackathon projects and being, okay, which ones do I think are actually potentially have product market fit? Which ones do I think have a chance of succeeding, and how can I help them, basically? And you can help them in many different ways. As I said, if you're an investor, you can possibly invest in them. If you are someone looking for a job and want to actually work for an early stage startup, that's perfect. If you're an educator, you can educate your audience about it, just like I am, right? So there's multiple different things you can be doing to add value based on the fact that you're essentially, as I said, at ground zero. You're the earliest you can be to a lot of these projects. And as I said, it's not just Opclave. You can go to the showcase here on ETH Global's website and go and comb through it all and see what's happening and see everything that's been submitted. But the reason I wanted to highlight Opclave is because I just thought it was really, really cool, and it got a lot of attention. It popped up on my feed, and it's using kind of like novel technology, and it's using technology like optimism to create this, and account abstraction, which is obviously very topical lately, to create this. So anyway, you can go check this out for yourself. I'll link it in the YouTube description below for you to do so. All right, so just a quick tweet here from Zach Williamson, who is the CEO of Aztec Network, correcting someone who doesn't understand the difference between a trusted setup and a multisig. So it's a very simple difference. A trusted setup is a one-time generation of an encrypted secret. If anybody knows the secret, the ZK rollup isn't secure. So you're probably used to trusted setups. You may have heard of Tornado Cash's setup that was done a while ago. I actually participated in that quite a while ago now. The KZG ceremony is a similar kind of thing, where you've got like a setup where only one person needs to be honest, and then the whole thing is secure. That's a trusted setup, right? Whereas a multisig is completely different. It is a small group of privileged individuals who can control or change a smart contract. So, for example, pretty much like all the L2s today have a multisig on them, right? And the bridge where the funds get bridged into is controlled by that multisig, and if they wanted to, they could steal the funds from there. Not saying that they would, but they could steal the funds from there, right? That's the difference there. So a multisig is definitely way less secure than a trusted setup, and I would even say it's not even worth comparing the two, because there's such a huge difference between them. But I just figured that was worth pointing out, because there may be some confusion being pushed by certain people in the industry that I wanted to correct there. So anyway, just a quick note on that one. Moving on. So the Ethereum Attestation service has just shipped a new feature, which is private data attestations using Merkle trees. So you can now leverage private data attestations for secure verification, selective disclosure, and enhanced privacy without revealing the entire data set. Now, I've talked about the Ethereum Attestation service before, about how it's a public good and it's trying to create kind of like a attestation station, I guess you could call it, where you can build up these attestations over time and be able to do things like decentralized identity and prove who you are, and do it in a privacy preserving way, and in a way where no one party is actually getting a benefit from this, as I said, because it's a public good. So yeah, this is the new feature that they announced and integrated today. And now the full details obviously are available in the blog post, which I'll link in the YouTube description below. And it requires a little bit of knowledge about Merkle trees, and they explain that in the blog post. So I'm not going to try and explain like I'm five on the refuel, but you can go give this a read to kind of see what it's all about. And then they explain how they're concealing and revealing the attestations and how it all works under the hood and everything like that. And they also give a bunch of example use cases, which is something that I wish more apps did when they actually announce new features. Because I think it's quite hard sometimes for users to immediately recognize a use case for something. So having that in the blog post where you announce the new feature is actually a huge benefit for users. And these are some of the example use cases that they've listed here. So something like identity verification, access control, employment history and references, academic records, all this sorts of stuff is made better and more efficient and more private and secure by using something like the Ethereum Attestation service to handle all of this. So anyway, you can go check out the blog post. As I said, I'll link it in the YouTube description below. But I do wish that more apps did this when they announce new features. So anyone who does marketing or anything for apps or products out there, take that on board, and maybe I'll see one of those in your future announcements there. All right, so we have a really positive update on the Euler Finance exploit. So 51,000 ETH, I think it ended up being more than that. I think it ended up being about 58,000 ETH was returned to Euler Finance, which represents, and a bunch of DAI as well, which represents just over 50% of the total funds stolen. This is very, very cool. I love this. And I remember I said last week, or just after the exploit happened, that I thought that, I initially said that I thought that there was a low chance of the funds being returned because the hacker was washing them through Tornado Cash. But then a couple of days later, the hacker started doing really, really weird things, like sending some funds back, sending some funds to the Ronin bridge hacker for some reason, sending funds randomly to people. And then since then, they've just been doing more and more of those weird and random things, and now they've returned a huge chunk of the funds to the Euler Finance team here. So yeah, it seems like most of the funds should get returned. It seems highly likely that most of the funds will get returned here, which makes me extremely happy because, as I've said plenty of times before, Euler Finance is one of my favorite kind of DeFi apps in the ecosystem, one of my favorite teams. Obviously, you guys know I'm an investor in them, but yeah, I kind of saw this happen, and I was like, this sucks. It sucks for the team. It sucks for the users. And then I kind of was really sad because I'm like, it feels like there's a low chance that the funds are going to get returned. But now it seems like there's a much higher chance. So really great to see this. Hopefully the rest of the funds get returned. Well, not all of the funds can get returned, given that some was sent through Tornado Cash and some was sent to random users and the Ronin bridge hacker, which is North Korea, as you guys know. But almost all of it could be returned. And then the shortfall could potentially be covered by Euler themselves, or maybe some insurance fund that they spin up. Who knows? But yeah, I'm very glad that users are going to get, at least right now, at least half of their funds back. Hopefully almost all of their funds back once everything hopefully gets returned in the near future. But I'll keep you guys updated on that one. All right, so Hayden Adams from Uniswap shared a chart that is on the blocks data section here. So the DEX versus SEX volume ratio is at an all-time high. So it's up 25% since the FTX collapse to 20%. This is really insane and really, really cool. So basically what this shows is that DEXs account for 20% of the spot trading volume and centralized exchanges account for 80%. And this is up from, basically 0% at the beginning of 2020. So in 3 years, we've gotten to 20%. Now, obviously, liquidity network effects are really hard to break. And also, DeFi has a lot of its own issues, obviously, with scalability and fees and stuff like that, which made it harder to compete with centralized exchanges. But those issues are slowly getting ironed out, slowly getting worked away. And that means that more people are using these products, more and more liquidity is flowing into them, and the percentage of DEX to SEC spot trade volume is going up. Now, I can't wait until the day that it's at least 50% and we basically flipping the volume, because that to me signals that we've basically, won in the eyes of, I guess, the more mainstream audience. For me, decentralized finance or DeFi generally has already won. It's just a matter of getting it adopted and scaling it out and things like that and developing it out. But I just think it's such a huge step above centralized exchanges and services that to me it already won. I mean, it won back in 2019 when I was fully convinced on DeFi, or I became fully convinced on DeFi. It won back then in my mind, and I knew it would take a while to get to a point where it took over CeFi, but I think eventually it will. And as I've said before, I think CeFi will eventually just become a fiat on-ramp for crypto. I really do think that we can live in a world in sometime in the future where a lot of CeFi services actually don't custody funds at all. They do a kind of MPC scheme where they are a signer on a wallet, but they don't custody your funds directly. And Coinbase already does this with their Coinbase wallet, but essentially giving users a way to still have recovery options and still have like someone that's centralized to help them get their assets back if they lose their password or something like that, or they lose their access to them for whatever reason, right? But not having custody of the funds, which I think is a pretty big deal. Obviously, not your keys, not your crypto is the mantra, but yeah, very, very cool to see that decentralized exchanges continue to not only grow but eat into centralized exchange volumes, which is exactly what we want to see. All right, last up here was a tweet that I put out earlier today that I wouldn't say it caused too much controversy, but I got a bit of replies about it and people asking me to expand on it more, so I figured it was worth expanding on the refuel here. So I'll read out the tweet first. I said, Layer 2s are not currently decentralized. In fact, many of them are currently more centralized than the most centralized Alt-L1s. In saying that, many of the Layer 2s have credible paths to decentralizing every part of their stack and will have an easier job of doing this than a Layer 1 would. This is the goal of Layer 2s, not today's current state, but a future state where they actually inherit Ethereum security and decentralization properties. The ultimate dream is that the Layer 2s can become decentralized while offering cheap transactions to users and an infinite garden for developers to build within. This is the Gwei. So there's a lot to unpack here, and I'm going to try and keep it relatively brief so I don't go over time too much. And also, you guys know I just speak off the cuff, so I haven't prepared notes for this or anything, so I'll probably be jumping back and forth a little bit, but I want to kind of break down why Layer 2s have an easier path, or a much easier path in my mind, to decentralization than Layer 1s. So really, the crux of it is that because Layer 2s are essentially outsourcing their decentralization and their security to Layer 1s, so when they're in their end state to Layer 1s, they don't have to worry about everything that the Layer 1s have to worry about. So for example, Layer 1 Ethereum. Why do we consider Layer 1 Ethereum to be decentralized? Like, how did we get to the point where Ethereum Layer 1 is a decentralized ecosystem that has no central actor, has no, obviously, multisigs or anything like that? There's no, there's not even a central group of people that can control the chain. How did we get to that point? Well, it took a long time, right? And there's a lot of different properties of Ethereum that makes it decentralized. The distribution of ETH, right? Distribution of ETH has to be widely distributed, especially on a proof of stake scheme, in order for it to be decentralized. We had to come up with the proof of stake scheme and develop it and research and develop it over many, many years and integrate it in order to upgrade Ethereum's decentralization to get it to a point that we were happy with, right? And there's still lots of work to be done there. We have client diversity. We have 10 different clients on the CL and EL side of things. That took a very long time to get up and running, and sustaining that in of itself is very expensive. It's not a cheap endeavor, right? We have thousands and thousands of nodes running and hundreds of thousands of validators running all around the world. We have an extremely strong social layer, and I could go on about all the properties, but as I said, I want to try and keep it brief. But those are just some of the things that have developed over many, many years to make Ethereum decentralized. So does a Layer 2 have to worry about that? No, it doesn't. And this is the beauty of a Layer 2. It doesn't actually have to worry about all of that for decentralization, because in the end state, when a Layer 2 is not secured by a multisig, has its fraud proofs or validity proofs in, and can't be arbitrarily upgraded by a small group of people, essentially the Layer 2 becomes a one-of-n trust assumption, where essentially you only need the one sequencer to process your transactions to get the benefit of layer 2. And even then, even if the sequencer went down, you can fall back to layer 1, because ultimately a layer 2 system is just a set of smart contracts that lives on the layer 1. And because the layer 1 is decentralized, it is secure, it is robust, resilient, it doesn't matter if the layer 2 was to go offline completely, you can still fall back to layer 1 and you still have access to your funds. So that is, and that's what I'm talking about, layer 2s in their end state. Now, obviously, as I said, pretty much all their layer 2s today are nowhere near that. They're all very centralized still, but they have a much easier path of getting to the decentralized state, because for them, getting to the decentralized state really is just removing the multisig, honestly, and just, and basically, I'm talking about like decentralizing it so that there is no central party that can, I guess, like steal user funds from the bridge contract, for example, right? Or rug user funds from the bridge contract. Really, ultimately, all they would need to do is get rid of the centralized controls, the multi-sig, or any kind of like upgrade keys, and making those contracts immutable, or immutable to a point. Like there are some contracts that maybe, you know, they don't want it mutable and that's controlled by a governance or a DAO or something like that. But getting it to that point is much easier than the layer 2 itself having to go through all of the things that I just talked about for Ethereum layer 1 to achieve decentralization. And that brings me to my point about other layer 1s. They have to do that to get to the decentralization point that Ethereum is at. So their battle is uphill, right? They've got an extremely tough battle ahead of them. They have to basically develop everything that Ethereum has developed over the years since Genesis, right? And do that to basically get to the point where they're actually considered decentralized like Ethereum is. Whereas the layer 2s, they just piggyback off Ethereum. They just pay for the security of Ethereum, right? They pay the gas fees. And as I said, once they're in their end state and they don't have these centralized controls or anymore, and Vitalik has a post about this, of getting to the point where their training wheels are off, their centralized controls are off, they inherit that decentralization and security there. Now, there are other points of contention with layer 2s as well, such as I said, the sequencer, even though it's a one-of-n trust assumption where you only have to trust that one sequencer will process your transactions and you'll be fine, that's not great for censorship resistance, obviously. Because what ends up happening is that if there's only one sequencer and that sequencer is censoring you, there's nowhere else you can go except layer 1. So you can't, so it's still, you know, it's still fine because you can go to layer 1 and you know, a lot of the layer 1 censorship that we've seen in the past has been beaten back. And that's another thing that I've talked about before. And that's another thing that, that makes something decentralized, is being able to be censorship resistant, but you can fall back to layer 1 still, right? But obviously, you know, a lot of users won't want to do that because layer 1 is expensive, and maybe they can't even afford to do that because layer 1 is expensive. So how do we make the layer 2 censorship resistant as well? Well, we basically encourage decentralization, or at least distribution of the sequencer. So let's have 10 sequencers instead of 1, right? So now you have 10 sequencers that are hopefully individuals or entities that are separate from each other all around the world that will process your transactions, right? And from there, even if 9 of them are censoring you, there is still 1 there. This is what I mean by 1 of n. N in this case is 10. 1 of n trust assumption. Even if that 1 is still processing your transaction and not censoring you, the other 9 can censor you all day, every day. It doesn't matter. So that is the beauty there. Now, obviously, there are other things like validators as well, but the validators only need to be decentralized out or distributed out for liveness. And as I said before, you can still go back to layer 1 even if the validator goes offline on layer 2 for liveness, because you can process the transaction on layer 1. But it's the same thing as the sequencer, where essentially, you want to have maximum liveness. You don't want to have to go back to layer 1. So we want more than one person running a validator, or more than one entity running a validator. And that's why these layer 2s are introducing tokens to incentivize that, right? And you know, you might be able to stake and become a validator / sequencer and earn fee revenue from the network for staking your tokens, whether they be OP or ARB tokens, for doing so. But still, ultimately, the layer 2 is still just a set of smart contracts that lives on layer 1. You can always fall back to layer 1, and once their centralized controls are removed, which are much easier to remove than the centralization points of a layer 1, you instantly get all of that decentralization and security. So, and I think another analogy here that I quickly want to use before I finish up is, imagine a DeFi project on Ethereum. Imagine there is a Uniswap, right? And imagine Uniswap had a multisig on it, and it was a 3 of 5 multisig or something, and it was the Uniswap Labs team that obviously controlled the signers, and at any moment they could do whatever they wanted to Uniswap. Now, imagine that's all that was in place for the centralization vector, but if Uniswap is living on Ethereum layer 1, so how hard is it to decentralize Uniswap in this case? Well, get rid of the multisig, Uniswap's decentralized. That's it. That's what it's like for layer 2s, with a bit of extra stuff on top because there's a bit of extra complexity there. But that's the analogy I like to use because that's just one thing. Whereas, and then immediately Uniswap becomes as decentralized and secure as Ethereum layer 1 because it's immutable, it doesn't have any centralized controls, and Ethereum layer 1 is its ultimate source of truth. Whereas these other layer 1s, because they are their own source of truth, right? They have their own validator set and their own kind of decentralization or centralization properties, they have to get to that point where they have client diversity, they have a good distribution of their native token. They have a good distribution of validators around the world, and they don't have too much centralization in that. They have the ability for people to run nodes, and they have thousands of nodes. They have a strong social layer, all that sorts of stuff, right? They have to build all that from scratch because they don't get it from Ethereum. And that's why I've always believed that layer 2s are the better path forward for scalability of both the technical scalability, but also social and decentralization scalability, because in their end states, layer 2s are only meant to be an extension at their very base level, an extension of Ethereum's block space. And to be an extension of Ethereum's block space, you are considered to be decentralized and secure like Ethereum, with some other properties, like obviously, as I said, this decentralizing out the sequencer and the validator and stuff like that. But that's how I view these things. And that's why I believe that it is much easier for layer 2s to decentralize than a layer 1. But yeah, anyway, I'm going to end that there. Actually, one last thing I wanted to say as well was that on L2Beat, just a reminder, you can actually see a risk analysis of every L2 that's live today and see what centralization vectors they have in place and what training wheels they have on right now. I haven't seen an equivalent dashboard for layer 1s. So not only do we know that layer 2s right now, pretty much all of them are still quite centralized, and they kind of can become more decentralized and inherit Ethereum's decentralization and security later on. We know exactly where their centralization points are and what they actually have to do to get to the point where they're considered decentralized. We don't have that for layer 1s, really, and maybe we do and I don't know of it. I haven't seen it. If you know of a dashboard that shows a risk analysis for different layer 1s that is as unbiased as possible, please link it to me. But yeah, I'll link this in the YouTube description below for you to check out as well. But I think on that note, I'm going to end it there for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.